Welcome to Framework Fortune and another episode of Portfolio Power Up, and all the way from the UK. I think he can verify that himself. Liam Connor from Confident in Crypto. How are you doing today, sir?
Doing very good, thank you. Very good. Glad to be on the show.
Absolutely glad to have you. And if you want to give us a little intro about yourself and tell everybody where they can find you, and then we'll get into the juicy stuff.
Excellent. Right. So, I'm a cryptocurrency investor. So I trade and invest in Bitcoin and all the other cryptocurrencies that are out there. And on top of that, I also have my YouTube channel, which obviously you know yourself. And I'm just really sort of starting out. 3 years now I've been trading. And you can find me at Confident in Crypto on YouTube. That's where I do all my content. So I do technical analysis and dive into some cryptocurrencies as well. So yeah, it's all very exciting.
Yeah, very nice, very nice. You got some nice growth going over there on your channel. Been keeping an eye on it, watching it. Hey Greg, good morning, buddy. Got a couple people in the live stream starting to get active. Everybody's still shocked, I guess, from the short live stream day trading I did earlier. But yeah, man. Let's talk about a little bit of news first. I just saw a little bit earlier that Visa is now rolling out a lot of plans for a lot of the banks, and I don't know if you get that news or not, because I think it's more American news right now, but it could be global because Visa is global.
Yeah, we get quite a lot of news in crypto with Visa, of course. They roll out a lot of stuff for the cryptocurrency platforms. So yeah, there's a lot of news at the moment, especially with Visa. Which news is it today that you're looking at?
Let me see here. Let me pull it up real quick if I can find it again. It said something. I don't know. I've done lost the article now. But
That's always the way, isn't it?
Yeah, it was some new news about Visa. They were rolling out a bunch of stuff, and so maybe that may be to do with the little pump we're getting in crypto right now, or maybe it's Reddit or all that. What's your thoughts on the Reddit Dogecoin thing?
It's nice to see, of course, everyone get excited about cryptocurrencies. Obviously, Dogecoin's a bit of a meme coin, as you know. It's not really what crypto's about, so to speak. But it's a bit. What I don't like is the whole pump and dump sort of thing that's going on there, because it's not great for crypto. It's not great for the way it looks or it comes across. But it's exciting, and if people have been making money on that, great for them. And if they haven't, then obviously that's the bad side of it. The people who lose the money.
Now, from my understanding, and you've got more knowledge on it than I do, Dogecoin is based off of kind of the same blockchain systems as Bitcoin and Litecoin.
Yes. So that's correct. So Bitcoin's the original cryptocurrency. It was formed in 2009, and then it was forked, which basically means someone's taken the code and made Litecoin, and then from that Dogecoin was made. And the main difference is the number of coins. So Dogecoin's got an unlimited produced over time. So it's not really designed in a beneficial way to be holding it long term. And that's kind of where it's more of a meme. It's got obviously the dog logo on the picture and so on. So it's a good bit of fun. People like it. People love the memes, but it's not really like the serious side of crypto. But it's good fun. I like Doge, but
yeah, even Elon Musk tweeted out that he always looks for the least likely outcome to happen, the most entertaining outcome, and he said that Dogecoin would be the most entertaining outcome if that was the currency that was adopted globally. Do you think that's a possibility, or is Elon just talking crazy on Twitter like he normally is?
He's talking crazy, of course. I mean, if it did, become the global currency, it'd have the same problem that all currencies have, which it would just inflate to zero over time. And that's kind of the whole purpose of Bitcoin. It's to do exactly the opposite. But yeah, it's good fun. Dogecoin will probably be a coin that floats around maybe indefinitely. As long as crypto's about, that meme's probably gonna stay with us. But as a currency, it's probably not gonna take off, sadly.
All right. So some more news that I saw yesterday was Bitwise is launching a crypto ETF in the U.S. stock market. Now, do you guys have any crypto ETFs over there in the UK or Europe?
We don't actually in the UK. It's a bit unfortunate, but all crypto derivatives have been basically been banned. So we can't actually purchase
Really?
any derivatives. Yeah, it's pretty unfortunate. It's under the guise of protecting investors. So
Well, that's what everything
obviously,
always is.
yeah, yeah, man, it's exactly how it always is. And sadly, it means we don't get it here. I'm not sure about Europe, but I know in America there's a few ETFs sort of coming about. There's already the CME futures,
Yeah.
which is obviously quite good. But yeah, the ETFs are sort of the next step.
So how long has it been banned in the UK? Is that like all
This
the
is recent.
cryptos?
Yeah, only the derivatives. So you can still purchase cryptos like normal. You can still buy spot, but you can't buy crypto derivatives. So that took
Okay.
took place, I think, on January, somewhere around January the 14th. But it was announced at the end of last year, and it came into force this year. So if you've already got crypto derivatives, you can continue to hold them and sell them. But you can't make any new purchases, and that's for the retail investors. I think it is different for maybe the bigger investors who still have access to the different sort of markets and tools.
No wonder we left UK and started our own damn country. No, I'm just kidding. No, that's crazy, man. I can't believe they're doing that. But I did see that also
Yeah,
India is talking about banning cryptos indefinitely. Now,
that's
what do you
right.
think all this is with government? I don't want to go on a big government tangent because Lord knows I can. But what do you think it is with these governments trying to ban cryptos and stuff? Are they scared? Are they trying their best to fight it because they know what's coming for them?
So I think it's mainly about control, really, with the governments. Of course, they like to have control of the currency. They
Yeah.
like to have control of the markets, and that's something we've always seen. We've seen it with precious metals. I don't know if you know, or your viewers or anyone watching knows, but gold was once made illegal to hold
Mm-hmm.
in the US, of course, and it's nothing new, really. And Bitcoin really is something that the governments have no control over. It's decentralized. It's the power to the people sort of talk, and for that reason, I think they are scared. But I think more so they're more sort of wanting to get their hands on it a little bit, sort of get it under control, regulate it, and the options they have is either ban it and don't deal with it at all, or start putting in some sort of regulation, which means they can get a piece of the pie essentially.
Yeah. Can they regulate the cryptos themselves, or can they only regulate the brokers? Because I would think they could only regulate the brokers.
Yeah, I mean, mostly the brokers are the way sort of in, and that's the problem when you still have these
Mm-hmm.
centralized platforms, like you say, the brokers, like Coinbase, obviously being a classic example. They have to follow regulations, and
Mm-hmm.
I think you can go after certain cryptocurrencies if they have a particular founder, for example, and it all depends on the way the token was released onto the market. So you obviously have the SEC going over after a cryptocurrency called XRP, and
Yeah.
they're sort of a company, Ripple, that actually has that cryptocurrency. So it all depends on what different attack vectors different cryptocurrencies have. Now they have a really tough time going after Bitcoin because no one knows who the creator is.
Yeah.
It's not part of any company.
Right.
So it's very difficult for them to find an attack vector other than the brokerages and the trading and that sort of thing.
Yeah, it looks like the U.S. is kind of adopting it, and the politicians were fighting against it for a while. It looked like, but our
Yeah.
politicians are controlled by the big money, and Visa's one of those big money companies. And so what?
Okay.
So
Yeah.
what Big Daddy Money says is what goes over here. So I think a lot of
Okay.
U.S. investors and big institutions and stuff are realizing the potential these currencies have, and they're trying to switch the gear on it and actually get behind it. But we'll see. I know Janet Yellen, our fantastic Secretary of Treasury or whatever she is
Yeah.
she's was saying that it's used for illegal activities, which cash is used for illegal activities too. So that was like a very moot point. You know
Yes,
what I mean?
exactly.
It's like, what are you talking
In
about?
fact,
So
the dollar's used the most for illegal activity.
exactly.
That's where most of illicit activity takes place in the dollars, and the banks get fined all the time. Obviously, J.P. Morgan was found to be suppressing silver prices, and manipulating the precious metals. So
Oh yeah.
you find a lot of illicit activity actually happens within the so-called establishment, but obviously Bitcoin's going to have bad players as well, bad actors. Everything does at the
Yeah.
end of the day.
Yeah, because we're all humans. You know, there's gonna be
Yeah.
humans that are gonna break laws and all that stuff, and that's why I
Yeah.
think they're gonna have a hard time regulating cryptos because they regulate
Mm.
murder and that still happens. So, you know,
Exactly. Yeah.
there's not really any way they can stop it. And I would say, would you agree that if you do invest in crypto, you should have some type of ledger like this, some cold storage ledger, just for situations like that where the government may try to come after your cryptos and stuff.
I think that's quite a good point. It's something I've obviously considered myself. Obviously, if you keep your funds on an exchange, I don't think they're necessarily going to ban cryptos, of course, in the US or anywhere else. But it could happen. And if you've got your funds on a exchange, it's very easy to work out who's got what
Mm-hmm.
crypto. And so, if it is confiscated or they do purchase it off you, which is what happened with gold, they'll be able to do that. But if you have it off an exchange in a cold storage wallet, it does help make it more difficult to identify whose Bitcoin is stored in which wallet. So yeah, I would definitely get a cold storage wallet for that reason, but also just for security generally. It's much better than keeping your money with someone else. It's like you told me you had some silver yourself, some gold, or
Yeah,
I think you might have said it on a video. I can't remember, but you want to keep that yourself. You want to keep it
exactly.
on your person. Yeah, it's the same
Exactly.
principle with having that hardware wallet there that you're talking about.
Yeah, I definitely agree with that. That's definitely the precious metal
Mm.
crypto. You really want to have your money on you when it comes to that type of stuff because you never know what's going to happen. And if you
Yeah,
mentioned precious metals a couple of times, there's been a big debate in the financial world between a lot of top economists between gold and cryptos and which one's a better investment and
yeah.
all that. What's your thoughts on that?
Well, it depends what way you look at it. If you're looking at it from an investment perspective in terms of making returns, then obviously Bitcoin, other cryptos stand a better chance to make more significant returns. It's a newer market, it's up and coming. But when you look at historically, of course, gold's got a lot bigger
Mm.
history. And so I do think it has its place, and precious metals have their place as something that's a good store of value. It's proven over time. Um, so in that regard, I think they are superior in a way to cryptocurrencies right now. But the best thing is with Bitcoin is it has a superior supply and demand relationship, if you like, to gold. It's much more limited in supply, where it's such a smaller asset class in terms of size. We're seeing more and more demand, which is obviously pushing the prices up a lot quicker than say gold.
Right. So still, even though you're a big crypto investor, gold and silver still is on your still one in your tool belt kit or whatever you want to say.
Yeah, exactly. I get the point of gold and silver. I get why they're worth something, and I understand that. It doesn't mean I've allocated to gold and silver though, because for me the opportunity cost of obviously investing in gold or silver is I could have been putting more into Bitcoin or more into Ethereum. So I don't invest in them, but definitely understand their value. They're kind of like cousins, I think in a way, Bitcoin and gold. They have some similar properties, but sort of different, completely different at the same time.
Yeah, and I think the biggest argument is that you can't hold cryptos in your hand like you can gold. So, like if the internet goes out, your cryptos are worthless at that point, right? So
Yeah,
it's kind
exactly.
of kind of a hard
Yeah. Well,
a hard error to get over. But what is the chances that all the electricity in the whole world is going to go out at this point
yeah.
too?
Exactly.
Like
Yeah. I mean, that's exactly what I would say. I think we'd have bigger problems than,
exactly.
how much Bitcoin we've got,
Y-
if we have
Yeah, exactly.
that sort of
So
outage.
yeah, I think that
Mm.
debate is a pretty good debate, but I think cryptos are not going anywhere personally. I think it's let's talk
Absolutely.
about that. The future. What do you think the future of all these cryptos are? Because one of my questions is there's so many different ones, which there already is a bunch of different fiat currencies around the globe anyway, and they just transfer
Yeah.
over.
Yeah. Exactly.
So all these cryptos, will they be able to do that same type of thing if they do become a global currency, or will there be one front runner that will be the kind of like the U.S. dollar is the backer of the rest of the world's fiat currencies?
It is a difficult question to answer and definitely answer with certainty. I think there's definitely room for more than one cryptocurrency. And at the moment, the way we're speaking about it in this sort of debate is about it being a currency. I think there's a lot of use cases outside of global money that cryptocurrencies and blockchains can be used for. So what you might find is you might have a few different cryptocurrencies that do act as global money if we ever get to that point. This is sort of like the end game.
Yeah.
But you'll also find there's current cryptocurrencies that can be used in particular niches or sectors, if you like. So Ethereum, of course, is quite a big one, and that sort of focuses on banking services in a lot of cases, with decentralized finance essentially being taken from a centralized authority to a decentralized open financial system. So I think there's room for more than one. I think there will always be a few that dominate.
Yeah.
Like we see with Bitcoin at the moment, really dominating compared to everything else. And then you have Ethereum kind of, a lot smaller, but still dominant compared to the very sort of small cryptos. And I think you'll see that throughout time, because obviously the best and most successful projects will get the most use at the end of the day.
Yeah, and they call crypto gold, the online gold, and then they've been calling Litecoin the online silver. Do you think that's a fair assessment?
I think it's a good analogy. It does definitely make sense. I quite like
I
Litecoin
do too.
myself. The question, yeah, I mean it's cheaper to send transactions. It's compared to Bitcoin, it's cheaper as well for people to look at to when to buy to push the price up. But the real question is there a need for digital silver long term? And that's really where the question comes in, whether Litecoin will survive. When you have Bitcoin, because Bitcoin could take all of that store of value sort of market and I could leave Litecoin behind in the long term. But I still like it and I still hold it. And I think it does have a good narrative when it comes to being digital silver. It's just whether that really becomes a permanent thing, which will take a long time to prove, in my
Yeah,
opinion.
so you're a little you like Litecoin, but you're a little skeptical on it in the long term, uh, pretty much.
Yeah, I think
Okay.
absolutely, yeah. And I think it's the same with most
Yeah.
cryptocurrencies right now. It's very difficult to say long term that you want to, you believe in this and you could keep all your capital in it for a long period of time, because it's such a new market. Players come and go all the time. There's only a few that have really performed well and outperformed even the market for the last 2, 3, 4, 5 years in crypto. So for that reason, it's a bit difficult right now to stick with any one for a long time like you would with gold or silver.
Okay. Nice. So I want to go back. I want to continue on with that, but first I want to go back just a little bit. It was
Sure.
sounding like you were
Hmm.
saying that the value of these cryptocurrencies is not so much as a currency, but the value of those blockchain systems and what they're bringing to the table.
Yes, and no. Yeah, I mean, I think that is what I said, and I do think the use isn't going to be in currency for me personally. I think it's more about being like a hard money with Bitcoin, same as how gold isn't really used for currency, but it's a great store of value. It retains its purchasing power, and obviously it has certain properties that allow that, such as scarcity. Um, and so on. So I think that is a use case. That's one of the use cases for Bitcoin, for example. But a lot of cryptocurrencies aren't scarce in the same way, and they start having other utilities based on their underlying blockchains and the actual token utilities. And that's where I do agree with you, what you just said there in terms of the blockchain being what will determine the value of these currencies. And it might not be actual currency use, it might be more as an asset or some sort of service.
Yeah, yeah, that's what I've kind of been getting from my research. Is there's a lot more to it than just even a currency and a store of value. But there
Yeah.
is some kind of newer cryptos that have popped up where some of these brokers are paying interest on them. You know, APY. So like
Yeah,
USDC for Voyager, you get 8.5% APY. That's a hell of a percentage for just putting your money in there. And then USD
definitely.
coin doesn't change in price. Now, of course, if the US dollar drops in purchasing value, which is different than price, then those USD coins will buy less. But that
Yeah.
8.5% seems like a really great hedge against inflation.
Absolutely, and I mean, you don't get those sort of rates in a bank account
No.
anymore. We certainly don't here in the UK, and I think it's the same
Oh,
over
yeah.
there. And of course, you're getting a really good rate, a yield of 8.5% a year just for holding a dollar stable coins, obviously excellent. But there's also some risk that comes with these coins. They can go wrong. They are backed, obviously, by the dollar. Hopefully, you'd like to hope the companies that issue them are. And then as for the ones that aren't issued by a company and are decentralized, they could run into some problems with their code. So although you get a great APY, there is still some extra risk, of course, compared to holding your money in the dollar if you're looking at it in that respect. So you have a little bit more risk, but you get a much better return. So
Okay.
that's the way to look at those, in my opinion.
Can you elaborate a little bit more on what those risks might be, like what some problems could be with that?
Yeah, of course. So obviously you spoke about US dollar coin. There's another one called US dollar Tether, and it's issued by Tether, the company. And the issues they have right now, there's a massive sort of thing going on with Tether where there's a lot of FUD, there's a lot of uncertainty as to whether they're backing the dollar stablecoin at a one-to-one value or one-to-one peg. And of course, if it turns out they're not backing it with $1 for every $1 Tether, then you could see the value of Tether collapse or at least drop in the short term. And that's the sort of extra risk you take for a centralized stablecoin. It could be that the company's not managing everything correctly or properly. So it's the same as if you store your gold with a company. You don't know for sure whether that company's doing everything they say they are, if they're storing it correctly, or if they even bought gold for you at all. It's the same sort of principle. But then you have decentralized US dollar stable coins, like ones that haven't got a company backing it. And the issues with those is if they have a peg, which is like a soft peg, and it's quite technical, essentially it's governed by code and sometimes collateral as well. And if there's any issue with how that peg is determined, you could see a quick crash in the price. And that's the same with all new technology. There can be problems in the code and the contracts, the smart contracts, that is, sorry. And yeah, it's a little bit of a rabbit hole to dive down. But essentially, it's a new technology and it just comes with a few more risks. It doesn't mean you shouldn't use them, but you should just be aware that they are there, essentially.
Okay, and from my understanding, Ethereum 2.0 is trying to work on a lot of those problems with the smart contracts. Is that accurate, or?
Yeah, I mean, to an extent, yes. They're essentially changing the way that the network is run. So we have to take a step back to understand Ethereum 2.0 by understanding Bitcoin. And essentially, you have something called miners that maintain the network. So they will produce blocks on a database which contain all of the Bitcoin transactions. And they get rewards for doing that and maintaining the database properly. And they use something called a proof of work algorithm. Now, you don't need to worry exactly how that works, but that's what Ethereum uses, something called a proof of work algorithm as well. In Ethereum 2.0, they're shifting the algorithm to proof of stake. But as for the problems they're trying to fix, they're actually just trying to speed the network up because they have a lot of scaling issues right now in Ethereum. There's so much demand for Ethereum that they're struggling to be able to deal with so many transactions so quickly. And so Ethereum 2.0 is something that aims to solve these issues and bring down the transaction fees, which are pretty high right now. Just also allow the network to scale for mass adoption.
Yeah,
so hopefully that answers
the question. That's great. There. Those transaction fees, that's what they call gas prices, or is that something different?
No, that's right. Yes, it's called gas prices. So obviously, whenever you do a transaction on the Ethereum blockchain, you're using computational power. So it's like when you do a transaction in dollars, for example, you have to pay a fee to the merchant because they process the transaction for you. If you're using your card or something like that, well, it's exactly the same thing. The miners have to process the transaction. The network has computing resources which are used. And so you pay in something called gas. And the gas basically gives you a price for each different action that you do on the blockchain. And then that you pay for that. And the way it works is the more you pay, the quicker your transaction is accepted by the miners.
Okay.
And that's how you have the gas fees.
It seems like that could be problematic in the future. Like something that they need to work on is get lower gas fees somehow. Is there a way to do that, do you think? Or we're not that far ahead?
Yeah. Absolutely. There's a couple of ways you can do it. So obviously they're switching to a proof of stake algorithm from a proof of work. And in doing so, they've got some sort of updates that will help scale the system. So the one way you can do it is you have, rather than just one blockchain, you can basically do something called sharding, where you split the network into multiple blockchains that are all secured by the same proof of stake algorithm. And that will basically allow for more transactions to take place. But in the short term, because this is a long-term project, in the short term, you have something called layer 2 solutions, which is where you have different projects or applications, which are cryptocurrency applications, that can essentially take some of those tasks, some of those actions off of the Ethereum blockchain, do them on like a side chain, and then basically then give the result back to the Ethereum blockchain. And it just takes some of the strain off of the network in that way. So layer 2 solutions are more of an instant solution or fix.
Yeah, so you know way more about all the crypto stuff than I do. So I'm getting a lot of information. I hope the audience is learning a lot here because you are really putting out a lot of information. So I appreciate that. But let's hop in.
I hope you can sort of understand it because it's quite a lot to take in. So obviously, if there's anything you're unsure about, or you know, I've explained it too complicated, just say, and I can try and sort of tone it down a little if needs be. Because I'm still learning now. You know, it's been 3 years, and I'm still learning more every day.
Well, that's something I tell people. There's no such thing as a master or a guru when it comes to financial investing. Those don't exist. You're a student until the day you die. So all these people on social media who are like, I'm a guru, I made billions, come buy my courses and all that stuff. They're not a master. They're not a guru. You still have to learn. You still have to adapt all the time. They're just talking shit to make you buy their courses.
I mean, I pretty much agree. Yeah, absolutely. Always learn it, and there's always more. Be humble about it. You know, there's always more to learn. Someone will always know something you don't.
Do you sell courses? Because I might have just sneak dissed you and didn't mean to.
No,
okay.
no.
Right,
I don't. I'd love to produce some educational content eventually, but no, not at the moment. Okay. So yeah, you're okay.
Nice. So let's talk about, you do day trading with crypto, right? You do a lot of day trades, or
more like swing trades, but yeah, I mean, I do trade it and invest in it. Yeah, so I see them different. I know you're more of a day trader yourself.
Yeah. Well, I'm a long-term investor too. Like I buy the silver, the gold, and then I've got a portfolio of like dividend stocks, and then I've got a few cryptos like Litecoin, nice. Bitcoin, Ether, the big, kind of the big three that I'm holding for long-term pretty much. But yeah, I do enjoy day trading more than that, because that is kind of boring. In day trading, you're actually in the shit, and stocks are ripping and whatnot, or cryptos as well.
Absolutely, yeah.
I think, in my opinion, cryptos have a lot of good potential when it comes to day trading, because they can get some big moves, but a lot of times the big moves are a little bit slower than I would say like a penny stock rip. Like a penny stock rip will usually, it'll rip in like 1 minute or 2 minutes and then come right back down. Whereas what I've noticed with the crypto rips, they'll start ripping, they'll have a little pullback, they'll rip a little bit more. Like usually takes a few hours kind of for those big rips like that with the cryptos. So I guess that kind of makes I guess that kind of makes sense to be more of a swing trader with cryptos than a day trader. But from what I've seen, the same patterns like U's and triangles and flags and all that from stock market pretty much transfer over to cryptos, because it's the same type of price charts, same supply and demand.
Yeah, absolutely.
So what's your favorite strategy when it comes to day trading or swing trading? You got a secret pattern like the Alabama crab dangle pattern or something like that?
Nothing quite like that. I saw you doing I think it was Dharma's box, and I didn't know what that was, so I think you've got a few more tricks than me for the trading. But I tend to just do standard and simple chart patterns. I find a lot of traders tend to overcomplicate it. Have too many indicators, too many lines drawn, and the most effective thing for me is just trading the trend. So I like to swing trade. I like to take positions for multiple weeks and months in most cases. But when I actually enter the market, the trick really for me is you just look for a pattern like a triangle, and you buy the breakout. And that way you limit your downside risk, because you can use a stop loss if it goes back within the triangle or the rectangular area, for example. and then you can ride the position as it goes. So even if you get those little pullbacks, you're still actually riding the position upwards because you've got your stop loss and you can let the position go. And as long as you're in the correct trend, which is when swing trading comes in, as long as you're in the uptrend, if you're buying the stock, or in this case the crypto, you should be doing very well.
Yeah. And you mentioned some indicators. Do you use any indicators or any stuff like that?
Well, most people might not consider it an indicator, but volume for me is the best
Oh,
indicator.
oh,
It
yeah, yeah.
tells you the strength, of a candle, of a pattern. So that's the one I use the most. I use the Bollinger Bands. I think they're great. It's really good for predicting when volatility will come. So for you, with these penny stocks, I don't know if you ever use Bollinger Bands, but
No.
the bands tend to get really constricted, like really tight. And it normally means there's an explosive move coming. And you might see that if you put the bands on. And so there's going to be an explosive move in a particular direction because the bands have constricted so much. It's like a spring. You let it sort of coil up and then it explodes. So that's a good way to get into sort of like a breakout trade. So if you have a triangle on the chart, you see the bands are quite tight. You can watch it break out and enter a position. So I tend to avoid indicators. I don't overcomplicate it, but I use the Bollinger Band. I use volume and I use the relative strength index as well, just to see whether the market's starting to get oversold or overbought.
Yeah, the RSI. Yeah, I think the RSI has some uses, especially when it comes to swing trading in stock market or crypto. And the
Yeah.
Bollinger Bands, it sounds like you said that they get tighter. I don't really know much about Bollinger Bands. It's something I've never experimented with. Will the candles be getting tighter as well in the Bollinger Bands?
Yeah, exactly. So the bands basically show the range of the trading activity essentially. So as the range of the candlesticks gets tighter and tighter, the bands start to constrict, and generally as they constrict, it leads to a more explosive move. The same way if you have a triangle and the triangle gets to the apex, the trading range gets narrower. You tend to have a breakout either to the upside or the downside. It's a similar sort of thesis to that. So it sort of goes in quite nicely with these sort of breakout patterns that you have in your Western technical analysis or your candlestick patterns.
Interesting. Very interesting. I'll have to check in the Bollinger Bands. I'm kind of a proponent of trying to trade naked charts and just
Yeah,
follow price action and the trends. Because if you can do that, then you really don't need any indicators. But if you start using
yeah.
indicators, you can kind of add them to your strategy. But if you trade indicators without knowing how to trade price action, you're kind of trading ass backwards, in my opinion.
I
Would you agree?
completely agree. Yeah,
Okay.
yeah, for sure. Yeah, if you're just using an indicator, it's not enough. I only use indicators like you to sort of back up my price analysis, basically. So I wouldn't trade without the price, the price action. Naked trading is really good. I
Yeah.
definitely think it's a good way to go.
Yeah, especially if you're starting out, I think that's what you need to work on the most is that chart pattern trading, and then maybe later down the road add in some of that stuff. But I learned the
Yeah.
opposite way. I learned how to trade off of indicators first, and then I had to
Okay.
reprogram my brain. And it was somebody who actually has been following my channel since the beginning, Daniel B, who was saying, "You need to learn price action, you dumbass." And I was like, "Okay, finally, I figured it out." so
Yeah.
so I appreciate him saying that because
Mm.
I just learned backwards. That's all there was to it. But it's a lot easier to learn the correct way the first time than to have to
Oh,
go
yeah, for
learn
sure.
backwards. So definitely,
I, I I don't know about your personal experience, but it's normally a lot cheaper to learn the correct way first as
yeah,
well.
absolutely, absolutely for sure. And let's see here, we got. Oh, is there any specific platforms? I know your platforms in the UK are going to be different than the US, but maybe we've got some people over there who's watching as well. What are kind of the platforms that you use for day trading and swing trading these cryptos? And what are you looking for when you look at a platform? What kind of uh, what do you call it, specifications that they have? What are you looking
Okay.
at for those?
So you want a platform you can trust first and foremost. Of course, utility is great. They have charts, excellent. But you want a platform, especially in crypto, which is obviously quite new. There's less regulations. Um, you want a platform that's essentially a tier one platform. It's a great, it's well known. It's trustworthy. They're not going to have so many issues. They're not going to sort of scam you and take your money. So I obviously look for well-known platforms first and foremost, and a few of them, just to name them, is something like Binance, which I know in the US you have Binance US, but not the same Binance we have here. Another one's Coinbase. Gemini is another good one. There's a few different major cryptocurrency exchanges, and I'd look them up before sort of choosing an exchange. But when it comes to what exchange you use, it really depends on what your goal is in cryptocurrency, what assets you want to trade. So if you're someone who wants to only trade Bitcoin or Ethereum, something like that, you could probably use Binance US or Coinbase Pro. Just to trade the major cryptocurrencies. But as you start getting to the more exotic coins, so a bit like the penny stocks, you start having to use different exchanges that have more options. And Binance is great if you're in the UK or Europe, where you get a lot of options. I'm not sure what's best for the US in that regard, but you have to look for a different exchange that has more options. And then if you want to get to the really exotic ones, you have to use something called Uniswap, which is a decentralized exchange. And there's a bit of a learning curve on that, but that's how you can really find sort of like hidden gems that can do a 10x, a 50x, 100x even in 3 months in some cases. But,
Oh, wow.
Now you're really speculating at that point.
I'm going to write Uniswap down. I've not done any research on Uniswap. Right now I'm using the US. Our options are a little bit limited. We don't have a whole lot. And then each broker has different coins. So I actually have Voyager and I have Coinbase Pro. And then I also opened up Tastyworks because they said they were going to start doing cryptos. And then I was already using Webull for my long-term stocks. And Webull has started introducing, I think 4 cryptos on Webull. So it's
okay, nice.
I would like if something like Thinkorswim, which what I use for day trading stocks, if they would start doing cryptos and we could actually have an option to trade all the cryptos instead of having to have multiple accounts. But you gotta do what you gotta do, I guess, at this point.
I think that's quite good for if you're coming from a traditional background as well. You kind of want stocks and crypto all in one platform.
Yeah, that'd be nice.
I'd imagine a lot more convenient for you. So I'm sure a few more of those will start emerging as the space develops. So yeah, that'd be ideal for you, I know.
Yeah, so speaking about some of those exotic coins, Decentraland is one that I find interesting, and I'm not sure if I am bullish or bearish on it or what I think about it. I just find it interesting because basically, from what I've seen, it's kind of like a game, but it's a whole open world where you can buy real estate. And it's virtual real estate, and some of that real estate is even selling for millions of dollars on there that I've seen. What is the deal with this virtual real estate? What's going on with this?
It's crazy, right? So this isn't an area that I specialize in. So with cryptocurrency, there's a lot of different niches. So I wouldn't be able to give you as complete of an answer as say I can for some other areas. But Decentraland is exactly as you put it. It's a gaming world. It's basically a blockchain-based game. So the game is built on a blockchain. It's completely decentralized, which means all of the land and all of the characters, even as far as your actual domain name, is owned by you on this platform. So I don't know if there's many gamers watching, but when you play something like Fortnite, Call of Duty, any of the big titles, if you have a gun in that game or you have a particular character's skin, you don't own it. It's owned by the game company. So it's not actually your item. Whereas the idea of Decentraland and other blockchain gaming platforms is that you own the items in the game, including the land, which is how you have this digital online real estate. So if you imagine gaming as it is now, except for you own the gun, you own the skin, you own all of the assets in the game, and you can trade those assets between players. That's kind of the way I see blockchain gaming and how it has utility. It's basically decentralizing gaming, so it's owned by the players rather than obviously the game providers themselves.
And from what I was seeing, there's some potential to have your own virtual store if you've bought some real estate within there, and you could be selling and actually making money off of those game skins and whatever else that you can buy in the game. So that's kind of interesting where players can not, they don't have to be under the thumb of EA with all their bullshit, constant buy these updates and upgrades and add-ons and all
Yes,
this
yeah,
stuff. You're kind of in control of all that, and you can be the EA inside the game instead of having some big
yeah,
corporation do it. So that's very
exactly, yeah.
interesting.
And you still have people who will buy add-ons or extras, but they'll just be produced by the players, I imagine, a lot more, rather than, like you say, the content creators, now, or the game producers, sorry. But you still have maybe certain game companies produce content. It'll probably be better quality than some of it that's made by the players, but at least you have that option as well to get add-ons from other vectors. And like you say, you can have online stores, so you can actually have art displayed in an art gallery, for example, in Decentraland. So you can actually buy land, which you can then display digital art, which can then be bought and sold. And there's just many different use cases the more you go down that area. And it's all part of a big sector of cryptocurrency called non-fungible tokens or NFTs.
Oh yeah, and let's I want to get some clarity on that. What's the difference between a token and a coin? Because there is a difference from what I've seen.
I mean, they're pretty much the same thing, really. The way you could probably look at it, I mean, I don't know if this is definitely correct, but I've always just used them interchangeably. But a token generally is something that's on like Ethereum, for example. We have an ERC20 token, which is all the cryptocurrencies that fit under a particular type on Ethereum. Now, a coin, you might want to just consider it something like Bitcoin or Ethereum. They're pretty much the same. I mean, Bitcoin's not even technically a coin itself, but they're pretty much interchangeable. The only difference that matters is non-fungible tokens and normal tokens. So obviously non-fungible means they're not interchangeable, whereas a interchangeable coin is Bitcoin. There's 21 million of them. They're all the same. Whereas a non-fungible token is like having two different houses. They're not the same. They're not interchangeable.
So you can't like transfer from a token to like Bitcoin. Like you can't do like the transfers. What you're basically saying?
No, you can do the transfers, so you can still buy and sell them. Imagine like the dollar. So you have the dollar. $1 is always going to be equal to another dollar. They're worth exactly the same, and they are exactly the same, excluding wear and tear, of course. But it's the same with cryptocurrencies, right? They're completely interchangeable. Bitcoin, one Bitcoin is always equal to one Bitcoin. One Ethereum will always equal one Ethereum. Just like stocks, I suppose, as well. One Amazon stock is always going to be equal to another Amazon stock or share. Share is the better word for that. But with non-fungible tokens, they represent individual and unique items digitally. So you could have a house represented as a token on the blockchain, and it's non-fungible because no other house is exactly the same as that house. So that token is completely unique. So you can trade it with other tokens, but they're not interchangeable because they're not exactly the same.
So
Does that make sense?
yeah. So basically, the tokens can have different value. Like if you have one token,
Yes.
what's an example of one of these tokens? What's like the most popular one?
What, for a non-fungible token?
Yeah.
I mean, the land that you're talking about in Decentraland, those are all non-fungible tokens themselves.
Okay.
So,
Okay. Gotcha.
yeah,
All right. So that they'll have different values within in the game or the program or whatever it is on the blockchain.
yeah, exactly.
Nice.
Yeah.
Okay. Gotcha. Nice. And with that Decentraland on blockchain, that type of gaming thing, do you the way you can have a store on there, it crosses country lines, like it's a way to globally connect with people. Do you see that
Yeah.
transitioning into the real world, like maybe like an Amazon type of company, but decentralized, where because a lot of Amazon is a bunch of different sellers. It's not like Amazon has a whole bunch of factories and they're making every single product. They do make some of their
Yeah.
products, but most of it's sellers, but they're under Amazon. Do you think we could see a decentralized type of selling platform like Amazon come out of this with real products
Yeah.
and not just digital?
Okay. Yeah. We already see some digital art being sold on a platform called Rarible,
Okay.
Rarible.com. There's a few others as well. I'm not too familiar with the whole space, but yeah, you already have marketplaces where you can buy and sell real art, which is represented by a token.
Oh,
Um,
okay.
so they might have a digital form of that art as well on Rarible, but essentially you buy the token on Rarible, which is often just a digital form of the artwork, and then you'll have that artwork posted to you as well. So yeah, you can absolutely have borderless marketplaces, and it's actually what Bitcoin coming back to Bitcoin. That's exactly what cryptocurrency is about. It's all about having borderless transfers of value and communication, and it's all done in a decentralized way. So you haven't got to worry about going through customs to send your Bitcoin abroad, or you haven't got to worry about that sort of thing. So that really is what cryptocurrency is about altogether. In my opinion, I think that's one of the biggest use cases.
So what you're saying is that cryptocurrencies and the blockchain systems could make it to where we don't need government.
Maybe, yeah. I mean, it's quite a
put you on the spot.
I mean, it's probably possible somewhere. Yeah, I mean, it's so far down the line, isn't it, to have that scenario? But I think really, it's not too unreasonable as you start to understand more about blockchain and the way that blockchain systems are governed. It's not unreasonable to see no need for a government, because the whole idea of blockchain is to remove that centralized point of control as authorities, and instead of having a centralized person or authority that governs what happens, you actually have code which governs the laws of that blockchain. So if you take that far enough, you eventually get to this point where you could have different code governing things like economic policy or fiscal policy or monetary policy. And so it's not that unreasonable to then take that further and say, what about for law and stuff like that? So, you might be right. You might be right, basically. One day, we'll see.
Yeah. I'm wondering, though, I'm trying to think in my head, would it be better to listen to be, kind of controlled by a code or a bunch of idiots in Washington, D.C.? I don't know. The code is kind of scary because it's a robot, but then with the code, can the codes be corrupted? Is there any way that can happen? Can they be caught with Asian prostitutes?
Maybe not. But I'm sure there's definitely going to be some challenges, of course, to these sort of systems. The main thing really is that you're not having the code govern in the sense of like a robot deciding everything. I mean, maybe if you're someone who believes in AI, that will eventually happen, but essentially you have different people that vote on what code is put on the blockchain and what it does and how it's all governed. So it's just like the voting system we have now. That's how I imagine it. So this is how it works as well for if you want to update a blockchain in the proof of stake mechanism rather than the proof of work one, which is what Bitcoin is. But it's a little technical. Essentially, a lot of blockchain systems have governance where you can vote on changes to that blockchain. And to do that, you have to own their token. And then you can put proposals in and vote on those proposals, and any changes can then be implemented. So one change could be that code you're talking about to change the way the governance works or the rules of the system. If that makes sense.
So it's kind of more like a 100% type of democracy type of thing because everybody's voting on it. Now.
Yes. Yeah. Exactly.
Now I could see a problem with that. As much as I'm anti-government on a lot of things, people in mass tend to make bad decisions. Point in case GameStop. So I could see where that could lead to some problems too, though. Even though, like, do you see any way? I mean, do you agree with that? Do you think that could be a problem within those systems?
Yeah, I think maybe if you're looking at a scale that we're talking about, which is a global scale as a government or as law. But I think in terms of particular cryptocurrencies, I don't see that as an issue right now, because most of the people who vote on these things are people who understand technology. They're big advocates. And so I think a lot of people who hold these tokens, they're economically incentivized to learn about the token and how it works. Because if they don't make good decisions based on, how they want to change the actual token governance, then they're losing money. So obviously, when money is involved, they are incentivized to study, to learn, and to make decisions. Otherwise, they're better off not voting at all.
So yeah, that's a good point. So it's not completely free democracy. It's pretty much democracy based on marketplace is kind of what I would call it after what you just explained. Because if money's the driving factor, you don't want to lose money while you're all democratically governing it. You're probably going to try to make the best decisions possible. So, I mean, things could still go things could still go bad possibly because human beings
of course,
can easily be a coin flip of dumbass or not. So, but
yeah, absolutely.
That's very interesting because that's what I was curious about. How it would, because when you, like I said, that GameStop point, that's kind of the problem I could see with it, but. That makes a little bit more sense. When there's money on the line, people are probably more prone to. Well, I don't know, because the GameStop thing was money driven as well, but they didn't make some great decisions. Of course, I guess there's an argument there too that it was more than just money. It was a statement against government or whatever, but.
Absolutely, yeah, and I think it was driven as well by a few players, wasn't it? That the GameStop sort of pump, it all happened on a Reddit forum, and there's always going to be that sort of manipulation in any system, in my opinion, where you have certain players who drive a particular thing to happen. But if that person there who essentially drove the value of GameStop up by having that Reddit forum going. They want GameStop to go up if they hold it themselves, right?
Yeah.
The problem is they can sell it and then dump on the market. And there's a thing in cryptocurrency called staking, which is where you lock up your tokens. So you can't actually sell or spend those tokens for X amount of time. And a lot of ways you vote on particular cryptocurrencies is based on you locking up your token. So essentially, if you're locking up your token and you can't sell it, there's no economic incentive for you to pump the price quickly and then dump it, which is kind of what happened with GameStop there. So I still think the incentive structures are correct, that it's a better model than say what we have at the moment, where a lot of centralized players and a lot of centralized companies don't have an economic incentive to do what's best for the company. It might be best for them in the next month or two.
A very, very good, solid point. I like that. I like that point that you just made. Governments are not incentivized to do anything. So
yeah, exactly.
That's a good point. So, and I do think I would much rather have a code that's governed by the people than a bunch of idiots up there, snorting cocaine and deciding what's best for me in my life. I think that's a bad idea anyway. So
absolutely, I'm exactly the same as you in that sense. I don't want someone else to govern what I'm doing, especially not when I don't know what they're doing. And I don't know how they're coming to the decisions they make for me.
Yeah.
So that's the beauty of cryptocurrency. It's decentralized, like we've discussed, but also it's transparent in a lot of cases.
Yeah.
So you can actually see how everything's working. If you want to look under the hood of how Bitcoin works, you can see all the transactions that happen. You can see how the miners make their money. You can see how the miners are validating transactions. So you can see everything. And with this whole, I'm not very political, by the way, but with this whole sort of voting thing, the voting fraud that happened recently, that I don't think happened, but necessarily, but I'm saying, like, people didn't know if it happened or not.
Yeah.
And if you just got rid of that opaqueness to the system and it was all transparent, people wouldn't be questioning it because they could see exactly how it's taking place.
Yeah, absolutely. I mean, that's a good point. If we're going to have these dumb governments, we could at least have our voting system set up on some type of blockchain system to where we do have that transparency. Seems like that would make a lot more sense than taking a piece of paper and a pen like that seems a little old fashioned.
Yeah, exactly.
Like how's it 2021 and we're still writing on a piece of paper for our voting system?
I know. It's terrible. Right, we've got the internet. It should be able to be done in like 5 seconds, right?
Yeah, and have a full ledger of everybody who voted. Yeah, that's
exactly.
That's a great idea. Yeah. So pretty much everything you said is kind of my thoughts on my speculation of why I'm pretty bullish on crypto is because it is a new form of governance by the people that I think will definitely make. I mean, at this point, pretty much every government in the world's not doing a great job. Let's just be honest. Everybody's in debt, bunch of money printing, all that. So
Yeah,
I think
yeah, I
this
agree.
is I think this is a very good solution, and that's where the real value to me is we could see a global switch to kind of this self governance, which I think would
Mm,
probably make a better world. And if people, and I've said this on a different live stream, I said if you really want to make change, you probably shouldn't be trying to pump GameStop. If everybody globally just kind of went over to cryptos and got out of these fiat currencies, then the governments lose all power.
yeah. Exactly, yeah, and I think actually that's kind of what I've seen from this whole GameStop fiasco, and with Robinhood, of course, ceasing the trading and so on. Um, I think it kind of all ends up at the same place. Like all of these different areas, the elections, the excessive money printing from governments, shutting down the censorship basically, and then shutting down stock trading. It all leads to a system where it's not controlled by a single entity. It all leads to an open system that's active 24/7, where we haven't got money printing. It all just kind of converges to cryptocurrency.
Yeah.
So I know you said obviously it's great for governance, and that is true. But I think really at the moment, at least in the next sort of 2 years or 3 years, I think it's more about the financial aspect. So looking at things like trading, investing, looking at things like money, such as fiat currencies and whatnot. And it's all about basically taking all of that service and bringing it to the blockchain, to take it away from the centralized authorities
Yeah.
that run it to a decentralized system where it's accessible to everyone. There's no one who can shut down the system. There's no one that can print Bitcoin into oblivion, for example.
Yeah.
And I think really that's the movement we're seeing. It's the financial sort of
Yeah.
aspect of the freedom, and then eventually we might see many years down the line, perhaps something a bit further, like with the democratic sort of side of things.
Yeah. That's the world I want to live in one day. But that, like I said, that's the value that I'm speculating on is that we're more people are waking up to what these corrupt governments have been doing and are starting to
Yeah,
transition and get more involved with cryptocurrencies because there is a lot of I think, well, I don't know if there's a lot, but there's a lot of jobs that people can
mm,
get working for these blockchains and stuff, and they get paid in those tokens or the coins.
yeah.
So, you don't even, and I don't know much about that, but do you actually have a boss, or is the code kind of your boss in that situation?
So you do usually have a marketing team and so on. So you could easily have a boss, but essentially you're being employed by the voters of that particular cryptocurrency project,
Okay.
which comes back to the people who hold the governance tokens that we were discussing earlier. But it depends because some cryptocurrencies have more centralization than others. Some are fully decentralized, some are sort of semi-decentralized, so to speak. Um, Obviously, it's a lot better than being fully centralized, but yeah, it just depends on which project you work for. But you're always going to have a boss. It's like a public company in a way. You always have shareholders to answer to. And it's exactly the same with crypto. If you're working for a particular project, you're always going to have to answer to the token holders. So it's very similar in that regard.
Yeah, and I think Mark Dalton is in the live stream here. He's a ambassador of Polkadot, which is one of the
Oh, awesome.
cryptos.
Yeah, I didn't actually know that. That's
Yeah,
great.
so maybe Mark can give us some more information about actually working for one of those companies and how it is and stuff. Because I'm just interested in to
Yeah,
hear how that all is going to work and what that could possibly lead
I'm
to the
sure he'll know a lot
future.
more.
Yeah, because the one thing I'm always
Yeah.
doing is I want to understand how things work, so I can understand what is the possible future outcome, so I can make money on it.
So a lot of these, yeah, of course, yeah. I mean, a lot of these projects do have a certain allocation of the tokens which will go towards marketing or it will go towards project development. It's like a community fund, if you like. I know that. So these are a lot of the smaller cryptocurrencies, of course. Um, they have a set amount of tokens aside for these sort of activities, like paying marketers or paying developers. So it's all allocated essentially as far as my understanding goes, but I've not really looked into it as much as you're sort of thinking about employment and so on. So it's quite interesting actually. Be interesting to see what Mark says.
Yeah, I'm a bit of a out of the box investor. I do the normal trading and investing, but I'm always looking for opportunities outside of the box. What could be coming around the corner? It's pure
Yeah.
speculation, but sometimes you can nail that speculation and do really well. And I know we're running out of time here. Real quick, I want you to have
Yeah.
some give you some last statements to give to new traders
Sure.
and investors. But before that, can you explain real quickly that process of staking you were mentioning earlier? Because staking, I've seen there is some APY, some interest you can earn on staking your coins for several different platforms. What just kind of a quick outline of that and the risk involved with that.
So when it comes to earning APY, of course, you've got two different options. You've got using a centralized company to earn the APY, and you give them your tokens and they deal with the whole staking and earning the yield. Or you have the decentralized way, which is actually staking the tokens yourself. Now, both have different risks. But if you're doing it yourself, essentially, imagine you've got your Ledger wallet there or your Trezor wallet, whichever one you use. And basically what you have is you can actually interact with the blockchain directly using your cryptocurrency wallet. So you can then basically send your tokens to a smart contract or a cryptocurrency project, so to speak, like an application. It's actually a smart contract you'll be sending the funds to. And they will be locked into that smart contract, and that smart contract will issue the inflationary rewards, the staking rewards, which gives you that yield. Now, there's also different applications which can then automate that whole process for you and earn the best yield based on basically what you want. So one I'd check out if I was you, because I'm not the person to speak to for staking and the best places to go, but I check out something called Yearn Finance, and that's really one of the market leaders for earning yield.
Now,
And
I was just to say, Yearn is an actual coin too, isn't it? Isn't it like $20,000 or something like that for that coin right now?
I think it's about
30,000.
$30,000.
I knew
Yeah.
it was pretty high. I remember seeing it, but I've not looked into Yearn whatsoever. So
So yeah, you have the token of every project, right? So you have like Yearn, for example, which is the token. YFI, it's called, is the token for the Yearn Finance project. And that will obviously come with governance where you can vote on the project and the direction it goes in, as far as I understand anyway. But then you actually have the product. So the actual blockchain has a product, the application has a product. And so Yearn has a product where you can lock up your cryptocurrency in something called a Yearn Vault, and it will automate the process of earning yield. Now, I'm not an expert in earning yield. I tend not to do it, but it's not because it's not good. It's just because I don't fully understand the risks and the likelihood of something going wrong with the smart contract. And that's what the risk is when you earn yield. You're locking up your funds in a smart contract on the blockchain, and that contract can have a bug where the funds can be lost.
gotcha.
And so that is the risk, and that's why you have such great interest, because it comes with risk.
Yeah. So the more risk, the more reward. So that makes sense. All right, Liam. Well,
Yeah.
what's your last statements for anybody new to crypto who's wanting to start out trading and all that, and then tell them where they can find you at? I know you got a lot of good lessons over there on your channel.
Yeah, absolutely. So if you check out my channel, it's called Confident in Crypto. You should be able to find it on YouTube. You can find a lot of information on there, mostly about trading, about charting, me discussing the different possible price action. Cryptocurrency channels you should check as well. And you should really start with learning, in my opinion, Bitcoin and Ethereum. Those are the two biggest cryptocurrencies. They're the most important right now. And it is a bit of a rabbit hole. So you have to start with the basic too, and then sort of develop from there. And if you're going to trade, I would stick again with Bitcoin and Ethereum first. And then as you get a bigger understanding of how everything works, you can start to move to the more exotic coins. And then you can start using more difficult platforms like Uniswap, for example.
All right. Well, perfect. Liam, I appreciate you coming on. Hopefully we can get you on another day. Maybe we'll dive into a little bit more detail on actual trading or something
Yeah, that'd
like
be
that.
really
Or
good.
maybe I can hop on your channel. I don't know if your subscribers want to hear me babble about my crazy nonsense, but
I'm sure they've
I
got a lot to learn from you.
yeah, well, I don't know. Well, they can learn from my mistakes pretty much. That's the best place to learn from me is all my mistakes,
That's
all
true.
my losses. But yeah,
I agree with that.
I
With me as
appreciate you.
well.
Yeah, exactly. I appreciate you coming on. Appreciate
No,
working with
thanks for
you.
having me.
This has been great. guys,
Yeah,
go
really
check
enjoyed it.
out Confident in Crypto. Check out Liam's channel, especially if you're wanting to trade crypto. So there is a lot of money to be made. And you guys have a great rest of your day. We'll see you next time.
Yeah, thanks for watching. See ya.